Today we will be discussing a problem on internal reconstruction.
Okay.
Problem on internal reconstruction deals with the internal reconstruction of a firm by reducing its assets and liabilities. So this is the balance
Okay.
sheet of Tripati Limited. They have assets and liabilities. They have the liabilities of authorized capital of 8,000 equity shares of 100 each, and they have subscribed capital of 4,800 equity shares of 100 each, which gives 4,80,000, and they have 10% debentures of 2 lakhs, sundry creditors of 2,80,000, and their assets consist of goodwill 80,000, land and building 3,80,000, plant and machinery 1,20,000, stock 1,80,000, sundry debtors 40,000, discount on issue of shares 20,000, preliminary expenses 92,000, and profit and loss account 48,000. They have the scheme of reconstruction, in which first adjustment, fully paid equity shares were reduced to rupees 50 paid up. Next, they have to discharge their debentures by issue of 3,000 equity shares of 100 each as 50 paid up. And on third adjustment, all the intangible and fictitious assets should be written off by reducing plant and machinery by 20,000, stock by 25,000, provision for doubtful debts to be created at 12.5%. The first step, we have to pass journal entries. Okay, so this is the format of journal entry. It consists 5 columns. First column will be date column, next will be particulars column, third column will be ledger folio, fourth column will be debit, and fifth column will be credit. Okay. Now our first adjustment is related with equity share capital. Now we can see in first adjustment, fully paid equity shares were reduced to rupees 50 paid up. Okay. Now in balance sheet, they have 4,800 equity shares of rupees 100 each. Now these 4,800 equity shares should be reduced to 50 paid up. Okay. So 4,800 multiplied with 50, it gives us 2,40,000. Okay. So our journal entry will be equity share capital account should be debited with 2,40,000, and capital reduction account should be credited with 2,40,000. Clear? Any doubt?
No, no doubts. Okay.
Now our next adjustment, our second adjustment is debentures are to be discharged by issue of 3,000 equity shares of 100 each as rupees 50 paid up. And in balance sheet we can see debentures, 10% debentures are given as 2 lakhs rupees. So to pay this 2 lakhs rupees, we have to issue 3,000 equity shares of 100 each as rupees 50 paid up.
This is not clear. Will you just repeat this again?
So adjustment is what? Debentures are to be discharged. Discharge means debentures are to be paid off. We have to pay debentures by issue of 3,000 equity shares of 100 each as rupees 50 paid up. Okay. So now 3,000 multiplied with 50, because number of equity shares are 3,000 and the paid up value is 50 rupees. So it gives us 1,50,000. Okay. So our debentures account should be debited with the full amount, that is 2 lakhs. Equity share capital should be credited with 1,50,000. That's what we did. 3,000 multiplied with 50. So it is coming 1,50,000, and the remaining amount will go to capital reduction account. Okay. So debentures account debited with 2 lakhs, equity share capital with 1,50,000, and capital reduction should be with 50,000. Clear?
Okay. So here you have given the explanation of that in the particulars below, right?
Yes.
3,000 equity
Yes.
at the rate of
Being
50.
conversion of debentures into shares, and the difference is treated as contribution towards capital reduction. That is 3,000
Okay.
equity shares at the rate of 50 each.
Okay. Okay.
Now our next adjustment.
Mm-hmm.
The third adjustment is the amount available will be used to write off all intangible and fictitious assets. Okay.
Okay. Okay.
Like plant and machinery to be written off by 20,000 and stock should be written off by 25,000. So here we have to create